Good morning, good afternoon, good evening, wherever you may be. This is Sid at Elliott Wave Plus, and this is the October 21 of 2025 edition of our quarterly premium plan webinar. It's actually 7 p.m. Central Time here in the U.S. as we get started here. Before we move on to what I want to cover tonight, I'd like for you to be aware of my disclaimer. It's at my website, elliottwaveplus.com. To read the disclaimer in full, and please do, go to the site and scroll to the bottom of any page there, and you will see this Terms of Service Disclaimer tab. Click on that, and you'll see the disclaimer. It's there all the time. Please go there and read it in full. If I were to summarize it in one sentence, it would be there's risk of loss in all trading. I'm going to leave the website up here very quickly and move to just a quick list of things that I'd like to cover in today's webinar. Number one, I'd like to just very quickly give you the Cliff's Notes version of my website and the 4 subscription tiers. I'll try to shoot through that just super quick. Then I will go on to explain our momentum algos for premium plan subscribers and go into depth on how those work, how subscribers can utilize that our premium plan service and the algos associated with that service. And I'll also show a sortable backtest and optimization results spreadsheet that I'd be happy to provide anyone who asks for it. By the way, my email is sid@elliottwaveplus.com. Then I'd like to go just very quickly and show some of our calls in recent years. Most of these were what I call buy low calls based on all of the different forms of technical analysis that I use here at Elliott Wave Plus, which is Elliott Wave combined with Hurst cycle analysis. And we also utilize sentiment to a very large degree, as well as momentum indicators, oversold, overbought, money flow. I don't leave anything out if I think it's useful in making the calls that we make here. Then I'd like to show you some current ratio charts. I think there's some really important ratio charts right now that have been suggesting what's going to happen next. And I'll show several of those and what's going to happen next in the markets. Then I'm going to go ahead and show my Elliott wave counts on several items. I'll choose a few, and at that point, I take a few requests on some items to show. And then at the end, I'll show also, by the way, when you want to request to see during that period of the webinar where I'm showing wave counts, if you want to ask any questions, you may do so in the chat. And then to end, we have our usual half price offer for the first half off the first month for first-time subscribers. So there's the agenda. Really quickly, I'm going to show you my website. It's elliottwaveplus.com. I happen to be logged in as a premium plan subscriber right now. And once you're logged in, then you have these tabs up here. And this is the Wednesday and Sunday editions of our EWP screenshots. For instance, this is the October 19. This was the Sunday screenshots from 2 days ago. So anyone who's subscribed to the basic plan or higher, that's the $70 per month plan or higher, uh, will have access to our Wednesday and Sunday screenshots. I think you'd be shocked to know how many screenshots are included. There's usually about 150 of them, as well as anything additional that I talked about in the webinar that might be interesting, like something I talked about 2 days ago, was a pretty comprehensive list of companies that should be leadership companies moving forward in nuclear energy and uranium, batteries and energy storage, rare earths and strategic metals and lithium. When I come across that kind of information, I try to, and I think I just closed my website. Hang on a second. I try to make those things available not only during the webinars, but take screenshots that allow you to look at those things. Hang on, I'm bringing my website back over. Almost there. So that's the Wednesday and Sunday screenshots. The Wednesday screenshots, there's not quite as many. There's probably about 80. On the weekends, about 150 screenshots to view, and almost everything that you could possibly be imagine being interested in trading is usually going to be at least something you're interested in is going to be in those screenshots. And then webinars, there's the recording of the, and by the way, webinars are included with the $100 per month uh, Pro plan. And so it shows this is the October 19th recording of the webinar. And by the way, all of our recordings of webinars have a index on it. So if you're really just interested in mining ETFs, you can click on that and it'll move you directly to our coverage. You can see that the webinars, because we're covering so many items now, generally are at least 3 hours, and this one was actually 4 hours because it was, I think, a pretty um, pivotal. We had a number of items at a pivotal juncture at the website or in the markets. Then under nightly reports, there's two different things there. The daily trend report is something that goes out to every night to any subscriber at any tier level, including our cheapest tier at $25 a month that we used to call the crypto tier. Now we call it the trend tier. It does include Elliott wave counts on Bitcoin and Ethereum. That's the only Elliott wave counts that are included at the $25 a month plan. And you can see every night you get our trend charts. So there's about a dozen, maybe 18, I think, different trend charts you get. For instance, the Dow Jones Industrial Average trend chart. And this at the $25 level, this is basically, if it's in a green zone, it's in an uptrend. If it's in a pink zone, it's in a downtrend. And so I have some subscribers that attempt to actually trade this and just to stay long while it's in a green box and stay short while it's in a red box. And I think they probably do very well at that. That doesn't include, however, is how big of a stop to set and warnings that the uptrend is running, for instance, out of gas, and we'll show the difference there as we talk about the algos here in just a second. So that's the daily trend reports. Also, and included on daily trend reports, not only are the trend charts, the daily trend charts, but there's a number of crypto charts on there. No, hang on. Crypto charts. So if you're interested in, for instance, the Bitcoin A daily chart, trend chart, there it is. Bitcoin weekly wave count, there it is. Bitcoin daily wave count, so on and so forth. So the only combined Elliott wave and her cycle analysis that I provide at the $25 level is Bitcoin and Ethereum. The reason I originally did that was because most of the interest in Bitcoin and Ethereum, well, was from younger people, and I wanted to make sure that I had something affordable for them. And then the premium plan, which is what we're here to talk about. In every night, Monday through Friday, just like the trend plan, there's a report that goes out. And here's the report. And this is the report from, I think, this is tonight's report. And the first thing you get is a summary view as a premium plan subscriber of about 21, I think it is, different algos that we run. One is on the YM contract, the Dow Jones Industrial Average, the ES contract on the S&P, a couple of different leveraged ETFs on the S&P, the NASDAQ 100, the NQ contract, and then more. So there's a long list of that. I know we can open that, for instance, with a it's a PDF with a PDF viewer, download it and open it and see more signals. And then actual screenshots of what the algo, uh, and what our algos are momentum algos. There's no Elliott wave. There's no Hurst cycle analysis. There are some indicators to help decide whether you really want to be jumping into a trade or not. But for instance, this momentum algo on the Australian dollar suggested going short at the once the October 9 candle was complete. So it went short on the next as soon as the next candle opened, and it was in a short position until and by the way, I'll explain a little bit about the algo here. There's a little bit of a very small green arrow there. So when it goes short, it puts in a stop. It's a fixed stop at first. And then if there's a loss of momentum, which is determined by the Walter Bressert indicator starting to slope to the upside, it puts up a little green arrow, and that clues the algo into changing the stop from the initial fixed stop to a trailing stop. And as you can see, it ended up getting stopped out over here in profit. Okay. Um, so it tightened up the stop so much that the trade um, was closed. The downward momentum ceased to exist, and so it hit the very tight stop in profit there. Also included every night on each one of the tradable futures contracts is our proprietary sentiment um, template. So there's a daily template, and we also send out weekly sentiment charts on that basically compare the positioning of commercial positioning currently to retail traders positioning. And sometimes you get a situation where commercials are heavily short, retail is heavily long. That's a perfect storm of bearishness. Retail has a tendency to chase trends and no matter how far up they go. I think we just saw an example of it over the last couple of days in gold and silver, which I will show you here in a minute, where retail traders were so overloaded long that, and unfortunately, we've been flying a little bit blind lately because the COT report isn't coming out while the government is shut down. But retail was at nosebleed levels, which they typically are at the end of significant trends. We'll go into that a bit more as we move through the webinar. So what I basically showed you is, we'll go back to the home page, that if you go down through here, and let's say, oh, I'm interested in these weekly webinars, I'm going to learn more about that, and you can read about that, and then you can look at the pricing of it, and you end up at this pricing page, and there's the 4 tiers that I just explained to you. So it's easy to get to this page. If you're a new subscriber, first time subscriber, and just email me and say, hey, I'd like a 50% refund off my first month. I'm a first time subscriber, and at whatever level you subscribe at, I'll refund half of the first month right back to you. So there's the website very quickly, and and then moving back to the agenda now. We're gonna look at live charts of the algo, and for that I've chosen the Dow Jones Industrial Average. So this is a daily chart of Dow Jones Industrial Average, and each of these dark green blocks is a winning trade. So this is critical for you to understand. If so, every quarter I re-optimize, I re-backtest and optimize the algos so that they produce a combination of the most profit possible, and combined with a decent winning percentage. And the things that I backtest for are the settings of a couple of important indicators here. So while we go over this, I'm going to turn off the video of myself so you can see it better. So each green block is a winning trade. Had the current settings been in place over the last 3 years, then these would have been winning trades. Now, I'll represent to you, I've had this service and the algos for, I don't know, 5 or 6 years now, maybe more. And most of the settings really don't change hardly at all from one backtest and reoptimization to the next. And then the losing trades shown on here are shown in the red blocks, dark red blocks. You can see that there's one little one there, a little one there. Yeah, there might be a couple more losing trades in there that were stopped out almost immediately. But as you can tell, the winning trades, there's more generally much larger than the losing trades. And that's the way I designed the algo. So there's a number of ways to design an automated trading algo. The most popular one, which is not the most profitable, is where you take a position with the trend and you set a large stop and a tiny take profit objective, a fixed objective, no matter what. And so you might have 100 tick stop, and you only take profits as soon as it moves up 5 ticks. Well, what you end up with is about a 90 plus percentage, percent winning. It wins like 90% of the time, or even 95% of the time. The only problem is that 5% of the time when it hits your stop, it can take back all of the profits from about 90% of the trades all at once. And that's often how algo designers will promote their algo by the winning percentage. That's not how I design mine. And by the way, those type of algos, yes, they can put up profits over a period of time, but those profits pale in comparison with this style of algo. So this algo is designed to trade the markets the way a professional investor would trade the markets. So almost everyone's heard of, for instance, money managers recommend one of their key investment objectives is to cut your losers short and let your winners run. And that's what this is designed to do. So what I did here is a 3-year back test. And you'll notice that I put the statistics here so that you can see how it did. And the average winner, this is trading one YM contract at a time. The average winner was $2,878. The average loser was $1,259. So the average winner was about 2.5 times the average loser. And it had right at a 50% winning percentage. This shows how you can make tremendous profits winning only about half of the time on your trades, as long as your average winner is substantially larger than the average loser. Well, the only way to do that is to use a momentum algo. Once you see a buildup of enough momentum, it goes long. In this case, it can also go short. And then it sticks with the trade until, in other words, it has an open price objective. It sticks with the trade until it has a measurable loss of momentum. So, and this is, in this particular case, it went long and the momentum was very strong for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. And it was only when the Walter Bressert started, and I'm going to explain these two indicators for you now. So this green line here, and by the way, if it's sloping up, it's green. And if it's sloping down, it's dark red. When it's sloping up and therefore green, the algo will only take long positions. When it's sloping down and it's red, therefore dark red, the algo will only take short positions. So the algo is designed to trade with the trend. Another rule that most professional money managers stick by is to trade with the trend. And in this case, until that Walter Bressert, and this is called the Walter Bressert indicator. And notice that this one up here is called the adaptive moving average. This is Perry Kaufman's adaptive moving average. This is Walter Bressert's double smooth RSI. Both of these indicators are decades old. They're very traditional. And so what Walter Bressert did when he created his double smooth RSI, which he called the RSI 3M3, is he took a standard settings RSI, made a 3-period simple moving average of that, and then he made a 3-period simple moving average of the 3-period simple moving average that he just made. So it's so what you end up is this dark black line. It's a very smooth momentum indicator. And then what Walter Bressert recommended in his writings was that you put a moving average on that and look for crossovers. And that's what I do. And so the adaptive moving average, which in this case, on this particular algo, determines the trend direction. The settings are 10, 2, and 30. Now, those happen to be um, the inventors of this indicator, the adaptive moving average, um, that his original recommended default settings. Now, I backtest for the first two of those, and so that I don't always use 10, 2, and 30. But I don't backtest for the 30 because Perry Kaufman did not recommend changing that particular parameter. So I backtest for two different parameters there. And then I also backtest for a anywhere from a 3-period moving average to a 25 or even 30-day moving average of the Walter Bressert and to establish the crossovers. That is backtested and optimized. So all those two are designed to bring in the best signals over the last 3 years based on backtesting and optimization. Two other indicators I put on the chart here are not used on this algo. One is the synthetic retail sentiment. It kind of shows you probably about where the retail, where the retail traders are overly optimistic or pessimistic at any given time. Now, on some of my algos, like the one on the ES contract and one on the NQ contract, I use the daily sentiment index for that. And I will use that to filter out trades. So, and I use the backtesting to determine thresholds. For instance, on the ES contract, if the um, DSI is above 96, it won't take a new long trade because it doesn't backtest well. If the DSI is under 12, it won't take a new short trade because it just doesn't backtest well. So that creates some additional thresholds. But on the Dow Jones Industrial Average, DSI data doesn't exist. So I put this, what I call synthetic retail sentiment indicator that I devised. So you could just be aware, like for instance, right here, that pink stripe meant watch out. Um, Retail is very likely extremely overly bullish, and you can see that it wasn't able to move any higher there, and it eventually led to a decline. Same thing here. The that pink stripe was indicating that retail traders were probably way, way over bullish, and it would expect a pullback. And then this bottom indicator that I've used on every algo chart is the money flow index versus RSI. So the black line is the regular RSI. The money flow index is a volume weighted RSI. And this offers really excellent warning signals with these color zones. Like right back here, the RSI was above 70, whereas the money flow was well below it during this entire move up. And so that was warning that, like, wow, once you get this next pink stripe here, which means that which happened to coincide with a couple of other indicators also throwing up the same stripe. Is a universal warning that hey, the RSI is now moving down out of its overbought territory, which is below 70. It was above 70, but now it's moving below it, and the money flow is still below it. So that was a big warning sign. That was followed really by about 3 months of sideways price action. And those signals occasionally come up from time to time. There was a awesome buy signal back here. This was April 9. I think everybody remembers that day. The Dow had a 3,000 point up day. And I immediately recorded a webinar that was wildly bullish on just about everything. And that after a little bit of a pullback. And that turned out to be really universally my best call, one of my best calls of 2024. But I'll show you in a minute, it wasn't my very best. There was a couple more that bested it by a huge margin. Um, on individual stocks. So you look for these warning stripes once in a while. It usually calls for a pullback. So there's a lot of indicators on the chart that help you decide, yeah, maybe I shouldn't take this long trade. We're getting one right now. Now, the Walter Bressert and this moving average are moving up together. They're wide open. That means this probably is going to keep moving up a bit higher. Retail sentiment isn't quite up above the red dotted lines, which also indicates that the Dow Jones could move a bit higher here. But there is a warning sign here, and it's coming from the money flow indicator. The blue indicator down here is the volume weighted RSI. So this move to the upside has not been accompanied by strong volume. And that is often a warning sign. Now, when sometimes you get the opposite signal. For instance, right here, you had the money flow way up above the RSI. That's super bullish. And that was back in April, mid to late April, and to catch this up move to the upside. And you can see the money flow indicator was stayed above the RSI really until it started flattening out here. So the money flow and how it relates to the RSI is not used in the algo per se, but it's on the charts so you can decide, whether this is a signal you really want to take or not. So here's the way the algo works. Let's take this trade right here. So this green triangle is a buy signal. And you'll notice that the adaptive moving average was down sloping. It was red until that candle and it turned green. So all of a sudden we had a new uptrend on daily chart. And we were already on a green crossover from the Walter Bressert. So when those two agree for the first time, they were not in agreement for a while. Then all of a sudden they both agree. That produces the buy signal. And so it bought at market at the opening of the following candle. Now, this little zero here, this little circle, indicates that the buy signal candle was maybe a little longer than normal, which is not unusual. And so I have the algo, I backtest the algo to look for a potential, based on the last 3 years, would it be smart after a long signal candle to look for a bit of a pullback before you get long? Now, on this 3-year back test, most of those years, almost all of those years really have been full-on bullish years. It suggests do not look for a pullback. And that's why that's a 3-year look back algo. I also keep an 8-year back test algo. And on that algo, for instance, on that very same candle, it was a longer than ordinary, longer than average signal candle. And so it was based on back testing, and that this algo, the back test goes back to January of 2018. So 8 years. No, yeah, January of 18. It suggests that to wait for a 141 tick, that's 141 Dow points, pullback to get long. So when we look back far enough and catch several downdraft years, that would include, the crash of March of 2020 and some other pullbacks. A lot more pullbacks are included in this back test, and therefore it's pickier. And yes, it had a number of good winning trades, but this one had a few more losers recently than winners. In other words, if we turn over here into a bear market, I think this is going to be the algo that's going to be preferred. during a sideways or down market, in which I'll talk about that pretty soon. And that way and I'll just show you real quick. Over 8 years, oops, what happened? Let me change this. Over an 8 year period, we're going to go in to edit this strategy. You can see that it figures trading one YM contract at a time. It assumes that there's a $6 per round turn commission. The backtest started at the beginning of 2018 and goes through 2025. And there's all the parameters that I test for. And so I'm going to run that back test. And it basically says that if you started with an account size of 26,560 8 years ago, and ran this algo, and this is theoretical because this is based on back testing. The assumption is that had these indicators and settings in this algo been in place for the last 8 years, it would have brought in $176,000 worth of profit, trading one YM contract at a time. And here is the equity curve over the 8 years. That equity curve is about as good as of an equity curve as you'll ever see. Pretty much a straight line from the lower left to the upper right. And that basically represents how much your account value as it grew along the way. This and if it only took long trades, the equity curve would have been really good. If it only took short trades, it would have made money. It really wouldn't have hurt you to continue to look for short trades. And when you look at how over the 8 years, it went long 118 times with a winning percentage of 57%, brought in $109,000. And I think you'll be amazed that it also went short 96 times. Now, the winning percentage was a bit under 50%, but it still brought in some healthy profit. So it was worth shorting during those as well. Notice the average win on shorts, $3,800. The average loser, $1,300. On long trades, the average win was $2,977. Average loser, $1,854. And that is on the 8 year back test. And so something that I'm going to move to here quite soon on the premium plan is to also show you the signals on a 3 year back test and an 8 year back test, especially on items that have been trending to the upside, because there's no guarantee that trend is going to keep going much longer, in my opinion. One interesting aspect I'll also show you the difference between the 8 year back test and the 3 year is they both went long back here on October 17, and they're both still in the trade. So, how it's traded it is subtly different, but not that much different. So the algo is currently long the Dow Jones Industrial Average. After the candle on October 17, it got long at market on Monday this week, and it's still in profit. So it looks for two different indicators to agree as far as jumping into the trade. Then what happens during the trade? Well, see that little red arrow there? That means that the Walter Bressert indicator, the double smooth RSI, had started sloping to the downside, and that triggered the algo into changing the trailing stop, to changing from the original fixed stop to a trailing stop. And then two candles later, it had been tightening the stop, and then it got a loss of momentum. That means that the Walter Bristow and its moving average crossed over. We got a red block, and it said that the algo just said, get out of the trade. So it got out at market at the opening of the following candle, and that was a winner. And something similar on all these winners. It's really quite similar along the way. Now here was a losing trade. It's the only really obvious losing trade I can see where it went long and it moved along for a couple of days, and then it had a big down candle, and it got stopped out. You can't hardly see it, but there's a little sideways arrow right there. That's as big of a loss as you can take theoretically with this algo. That was the full entire size of the original fixed stop. So that's the largest loss you can have with the algo, and you obviously it can have some enormous winners. Um, Obviously, it's really optimized this 3-year back test to make money mainly in uptrends. But notice there was a period back here where it made money on some short trades. So that was a short trade. That was a short. That was a short trade. Any questions about the algo? Now, so what happens is we'll go back to the website real quick, and we'll show the nightly report one more time for premium plan members. And you'll see that tonight's edition um, it's showing that there was a limit buy signal on 1017, and it has not exited that trade. Now, there was a new buy signal tonight on the S&P algo. New buy signal tonight on the QLD, the 2 times bullish ETF on the NASDAQ. New buy signal on XLF, of the financials ETF. And then the green ones are all buy signals. There was the yellow ones, by the way, if there's a new sell signal, it'll be pink. Yellow means that trade management is required. And so there was a buy signal on bonds, the ZBE 30-year bonds contract on October 10. It changed the stop to trailing on 1015, and it exited the trade after today's candle in profit. And we'll look at that in just a second on Treasury notes. Crude oil, by the way, and we'll talk about crude oil as we move through. There was a sell signal on 1010. It just exited the trade. So it must have sensed a loss of momentum. Notice that the DSIs moved pretty low for crude oil DSI down to 32. These first two is an explanation of the Elliott wave count and what Hurst cycle analysis expects to happen next. Notice that Hurst cycle analysis expects upward movement in crude oil from mid-October all the way through mid-December next. And then natural gas, we got a buy signal yesterday evening, 1020 on that. And the DSI is still only 61. It has plenty of upside still to go. Hurst cycle analysis expects upward movement from mid-August 2025 through March 2026. So that's how you'd use the premium plan algos. There's also sentiment charts in there. I've done a lot of webinars about the sentiment charts before. Unfortunately, right now the government's closed, so we don't know where the commercials are positioned on everything. But I think that completes the portion of the webinar where I was going to explain our momentum algos. Oh, one other thing, and this is the sortable spreadsheet that we do every quarter. As soon as we get the back test done, we put the stats into a spreadsheet and we make it sortable. So if you look at the 3-year return on gain, and I can sort by that, or I can sort by anything. The average winner, the winning percentage. But I think the most important one to look at is always the return on gain. So what that means is, given the account size that was required during the last 3 years to not get margin called at any point, the gold algo was a winner this quarter at a 58% winning percentage and a 3-year gain of 578%. Um, quite excellent. The average winner was 4,566, average loser 2,159. Notice though that YM algo, the Dow Jones YM algo, was in a close second place. Its 3-year return on gain 464%. Starting account size 18,203. It brought in 84,000 over the last 3 years. I'll just let you know that I'm in contact with a Chicago, long time, well-established Chicago futures brokerage, and at some point, pretty soon, hopefully, we'll have it so that you can fund an account there and tell it, hey, I want you to fund one account and trade Sid's gold algo. I want you to fund a second account and trade Sid's Dow Jones Industrial Average algo, and maybe a third one. I wanted to trade the Sid's crude oil algo. And so that's something that I think is coming. I don't know how long it's going to take. There's still working on some internal matters on that. But in the meantime, you can do all of this yourself just by subscribing to the premium plan, and then wait for the email every night where we let you know, hey, we posted a new edition of a new nightly algo report, and you can place the trades yourself. You just got to check your email and look at the signals for about 10-15 minutes max, around probably between 6 and 7 o'clock in the evening Central Time, and you can place all the algos and mimic what the algos are suggesting to do yourself. Next item on the agenda is some of our greatest calls in recent years. Of course, I love this part. And this is, so I'm going to go through these screenshots real quick and show you some of our best calls over recent years. And I've marked each one of these with the percentage gain from the point I suggested that the item could be bought low. So recently, this year, back in April, I created a kind of a new designator that I call buy low. And you'll see this is an older chart. This is the oldest chart I'm going to show you. This is my wave count on CCJ uranium stock. You can see right over here, the day I produced this was March 15 of 2020 for subscribers. And CCJ was $6.73. It had bottomed down at $6 and around $6. And I was saying that I felt like it had finished a well, let's see, all the way back from 2004 to 2020. So about a 16-year long ending contracting diagonal. And ending diagonals are often dramatically reversed once they throw over, the wave 5 throws over a line extending from the extremes of 1 and 3. And here is what happened with CCJ. So that was this low right here. We're down around $6. CCJ is the second largest uranium mining company in the world, and it is in the only one in largest one in North America. It's a Canadian stock. It recently hit real close to $100. This stock is up 1,745% since the March of 2020 low, since I made that call. Dow Jones Industrial Average. I'm going to go back to, yeah, this was my weekly chart back in April. And I was suggesting Dow Jones Industrial Average would move up into up toward around 48.4 by late October. And here's what happened. It has moved up through late October, and it's not quite to 48.4 yet. But I doubt it'll quite reach it. But I think it's close enough to put on my greatest hits chart. But no, here's something that I think a lot of people don't realize. A lot of people trade these indexes through the futures or whatever. It's only up 28.5% since April. Now, that may seem like a lot, but when we start moving through some of these other charts that I'm going to show you, well, you're going to see much, much larger percentage gains. And it's my contention that there's almost infinitely better opportunities for trading and investing out there other than these indices, which people are addicted to like heroin. And I've been preaching this for quite some time, and I'm not sure if I'm getting through to anybody or not. I will say that my subscribership is at a high mark. I've had a paid service since 2010, and I've got more paying subscribers today than I ever have. And it's probably a lot of it is on how excellent this year has been, especially. This was my chart on gold, the daily chart in October of 2023. And you'll notice I have a black 4 down here, and a blue 1, and a blue 2. And I was bullish for God knows how high. I mean, the arrow stops at 25.50, but you can see how bullish this count was up from a black 4, a blue 1, blue 2, then a pink 1, a pink 2, and just on up. Here's a weekly look at that same screenshot that I week in October of 2023. So there's the black 4, there's the blue 1 and the blue 2, and I expected it to move on up. At least Hearst at that point was suggesting it would move up through October of 2024. Well, and notice that I didn't think that was going to be correct. I thought it would move up through September of 2025. And the reason is because I don't necessarily pay much attention to these Hearst cycle peak dates. I mainly use the trough dates. And when I use the trough only Hearst cycle analysis on it, it was suggesting it would continue higher through September 2025. Well, here's what happened. That low that I just showed you on those charts was right here in October of 2023. So here we are in September, October of 2025, and I suspect it still hasn't topped yet, although we had a big pullback today. $250 pullback on gold. And this chart I took today, it's a weekly chart, and you can't hardly see the down move on it, but I was calling for a top now. And the upward percentage gain on gold from that call that I made back in October 2023. So right there, notice I said the DSI is at 8. Downside should be extremely limited. This was the shot. This was it. This was the moment. And here we are, we're up 141%. We can look at some live charts here in a minute on these too. MP Materials. I suggested that this stock was a buy low stock. Why? Because I thought that it had put in a 5-wave up structure off of this low back here, back when it was around $10 a share, with a deep pullback ending with an ending contracting diagonal. I was listing this stock, MP Materials, at a buy as a buy low stock when it was real close to $10. Well, it recently went to $100. So this stock is up 900% off of that low. And you're starting to get an idea of how much more profitable it can be, choosing specific stocks like CCJ, the uranium stock, MP Materials is a rare earth mining stock, than trying to mess with these indexes all day as a trader. Here's another call I made. This was in February of 2024. I was suggesting that natural gas was done going down at about $1.50, and that it would rally big up out of there initially up into early July. Here's what happened. It moved up for through into about July. Yeah, I think it was June, July there. And that was only a wave one, and then it went on up from there. Notice that moniker right there, that black B moniker, is still in place. So I was expecting a 1-2 up out of there, and a big move on natural gas. And we got a leading contracting diagonal for one and an ABC pullback for two. And now it looks real like it's ready to take off and wave 3 of 3 to the upside. But that call did produce 220% of upside, far more than any stock index could even dream of doing in that period of time. Palladium. I know it was calling this a buy low stock down in here. I thought it had put in 5 waves up, followed by an ABC pattern to the downside, and I was suggesting that it was a buy low down here. Many of my subscribers, paying subscribers, who, by the way, almost all of them are still with me. Many of them have made over $1 million in their trading accounts this year alone, and starting with less than $1 million. And then they've added an additional $1 million in profit on top of that. I know one specific trader well in over $1 million, and he started with quite a bit less than $1 million. And notice that I was looking for upward movement through mid to late September on Palladium, and in a wave 3. Well, here's what happened. It did move up in 5 waves all the way up into mid-October. And it's put together a 5-wave structure. But now Hearst suggests that after a wave 2 pullback, there's just going to be more upside on Palladium. This was another just enormous call, and you can see it was up 89% from that low back in around April through October this year. REMX, rare earth mining ETF. I was calling the exact low right down here around $34. And back in April, and it suggested it was going to rally all the way into late 2026 next in a 5-wave impulse. So there'd be 5 waves up for an A, and then a choppy corrective but deep 0.786 retrace down through this low in April. Here's what happened. So far, it's up 152%. Now I'm expecting a pullback here next, and that I think has started on a lot of these metals. But still, those are just outstanding numbers. Now, on this one, I'll just have to represent to you on SBSW, a large platinum group mining stock. I was calling for this a buy low back here in the early part of the year, and I could not find one of my screenshots. I kept looking today for it. I did find this one, and it remained bullish up through late September of this year and suggested it would put together a five-wave up structure. Here's what happened. It's moved up in a five. Actually, I think in only three, a 1, 2, 1, 2, 3, 4, 3. That'll get a wave four pullback and on up into October. This stock is up 330%. I would have to say most of my paying subscribers got into this stock low and have been sticking with the trade and checking with me along the way. They send me an email. It's just like, I'm up huge on SBSW. What do you think? And I usually say something like, well, it's still in a wave three. It's not done. Stick with the trade. It was only until very recently that I suggested that someone might consider lightening up on the trade. Silver. This is my silver chart back in October 8 of 2023. So this is 2 years ago. This is my silver stock, and I was bullish for a move up to my around $50. By the time we got to the way I've got it drawn here would be uh, not even into 2025 yet, but still extremely bullish chart, a 1, 2, 1, 2 setup. I was looking for a 3, 4, 3, 4, 5 on up on silver. That was in October of 2023, 2 years ago. And here's what happened. There's that low on silver. And I've got that as instead of a 1, 2, 1, 2, I changed it to a 1, 2. And this big move to the upside. It's silver's up 157% from those lows. So those are some of the great calls I made this year and going back a little bit into last year and one all the way back to 2020. But I'm extremely proud of that work. There's a reason why my subscribers stick with me for long periods of time, and that's because I'm constantly looking for where the next opportunities are for some big gains and some important bottoms. So back to the agenda. Next thing I want to show is ratio charts. These are super interesting. Take you through these real quick. These in alphabetical order. Bitcoin priced in large cap energy stocks looks extremely toppy. We've got three different bearish divergences on Bitcoin when priced in large cap energy stocks. I think there's going to be a rotation. Bitcoin's going to be very weak and potentially large cap energy stocks will be very strong. This is Bitcoin price and crude oil. Once again, three huge bearish divergences, and it's trying to break down from this line up here, Bitcoin priced in crude oil. Bitcoin priced in gold, very bearish looking situation. I think on Bitcoin starting back in late 2018, we got a five-wave up structure. Even within the wave five, a nice clean five, a big divergence there between the pink three and the pink five. And now just really rolling over and looking weak. Bitcoin priced in real money, gold. I don't think Bitcoin's going to be the place to be at all. Matter of fact, I think Bitcoin will eventually go to zero as it is too slow, antiquated. It's just technology's not there. Now, there might be a different crypto to look at, but in my opinion, it is not going to be Bitcoin. In my opinion, is based on technicals, all the technicals I show you. I think Bitcoin will be even weaker than the S&P. Moving forward, another two huge bearish divergences going into that peak. Commodities priced in the stock market. So the all-time low in commodities priced in the stock market was in April of 2020. And it's no wonder because that was when crude oil, the front month contract actually went negative for a second. Then there was the big inflationary blast up in commodities price in the stock market up through mid 2022. And then the big downdraft down through December of 2024, but that bottomed in December 2024. It was accompanied by a big bullish divergence. So I'm calling this a double bottom on commodities priced in the stock market. On a 100-year chart, it looks very much like a double bottom. Also, this bottom, this low back here in April 2020, energy and material stocks were only 2.1% of the S&P, down from 17% of the S&P in 2008. So this has a lot of bullish potential. It's obviously broken up out of this uh, down channel. And we've got possibly a 1-2 setup here. I suppose it's possible it could base for a while, but I think that commodities have bottomed in a double bottom again when priced in the stock market. This is a new chart tonight that I developed, and so a lot of people, I wanted to, I figured a lot of people would ask me, how can crude oil rally if the U.S. dollar is going to rally? Well, this is crude oil, the brown line, and an overlay of the U.S. dollar in green. There have been periods of time where the crude oil moved up, and by the way, the U.S. dollar in green is inverted. It is inverted. So they both moved up together, actually, from November 98 to December 2000. And as you may recall, around 2000, there um, was an important top in the stock market, but look what crude oil did. Crude oil from 2000 only moved down through 2001 and then rallied big right alongside the US dollar. And really, crude oil and the US dollar inverted have been highly correlated. And so a lot of people ask me, it's like, I know you're bullish crude oil, Sid, but you're also bearish the you or what is it? You're bullish the U.S. dollar through year end. How could crude oil move up at the same time as the U.S. dollar? Because if the U.S. dollar is strong, that usually is a major headwind for metals. But is it a headwind for crude oil? And the answer is not necessarily. In December of 2020, crude oil moved up very aggressively, and so did the US dollar. Remember that this is an inverted US dollar chart. So they moved up together. And then crude oil has been moving down, and so has the US dollar at the same time. Since December of 2020, crude oil and the US dollar have been highly correlated. So you can't just look at the US dollar and say that you think crude oil is going to do this or that, but because of the U.S. dollar. Crude oil, I think, is much, it's independent of the U.S. dollar. And lately, if we get a stronger dollar, we could see stronger crude oil based on the current correlation. And I wasn't done yet, I don't think. Okay, here's crude oil priced in gold. Up from April of 2020, crude oil moved up in an impulse, a 5-wave structure for wave A, and since then it's moved down in a 3-wave structure. So 1, 2, 3, 4, 5 for A, B, C for B, and then 1, 2, 1, 2, 3, 4, 3, 4, 5. It looks like it is capitulating here from price on gold, and you can see that little uptick on this chart. That's the move down in that we saw over the last 2-3 days on gold. And gold was down to $250 today. So I'm counting this as a wave A and a B, either complete or very nearly so, and we start seeing crude oil much stronger than gold. How about crude oil price and silver? Same thing. It just said it moved deeper recently. So up from April of 2020, 1, 2, 3, 4, 5 for A, and then A, B, and then a 1, 2, 3, 4, and then capitulation 5. That's that blow off parabolic move we saw in silver recently. And now look at the we saw silver down even more percentage today, like 7% in one day, silver today. So I think that bottom is in. I think we're going to see crude oil stronger than the silver. And this has kind of been what the commodities have been doing. We've seen a number of commodities pop hard to the upside recently. Platinum, obviously, gold and silver, and then now and palladium, um, and rare earths. We've seen a lot of the metals pop to the upside, but they all didn't do it at the same time. It's sort of been on a rotation, and I think these charts are suggesting to me that it may be that the next thing to pop is going to be crude oil and natural gas. Here's gold miners priced in gold. So for all of this year, gold miners were just incredibly strong. But we started seeing some weakness several weeks ago. These are weekly closes. We started seeing some weakness in GDX as while gold continued to power higher. And it's possible that what we're seeing as an Elliott wave pattern on gold miners pricing gold is a triangle that up from January of 2016, we got an A, B, C, D, E triangle, and we could see the equities actually, gold equities, weaker than gold. Not sure of it, and that's why I've got an alternate account, but it would have to break out. And right now, that doesn't look like what's happening, especially after the parabolic moves we've seen in both of them recently. This is absolutely one of my favorites because many times when you price a uh, anything in gold, you get really clean Elliott wave structures because you're pricing that item in real money. It's not in this shifting sand of the dollar, the constantly, mostly weakening U.S. dollar. So when you count from January 2001, natural gas price in gold, you've got a 1, 2, and then 1, 2, 3, 4, 5 for 3, and then an A of an expanded flat, B of an expanded flat, then 5 waves up for C to end of wave 4, an expanded flat, and then 1, 2, 3, triangle for 4, capitulation move, terminal thrust out of the triangle, almost exactly to a Fibonacci target I have on the chart, looking for natural gas when pricing gold, the fifth wave, to be equal to 0.618 times the net traveled of 1 through 3, and that's in Burgundy. Uh, very close to hitting that. I think that natural gas has bottomed when priced at gold. And I can't, and the S&P priced in gold, it's amazing how weak the S&P is right now when pricing gold. The all-time high was back in 2000. It moved down in 5 clear waves. 1, 2, 1, 2, 3, 4, 5 for 3, triangle for 4, 5, and then 1, 2, 3, 4, 5 for a B wave, a C wave. The top was in December of 2021, and then 1, 2, I think a 1, 2. So we may get a little bit of a bounce on the stock market when priced in gold, because I think the gold just put in kind of a parabolic top for now and will be in a correction mode for several months. How about the stock market price in crude oil? From April of 2020, 1, 2, 3, 4, 5 waves down, followed by an ABC, the C wave to the upside, a 1, 2, 3, 4, 5, the final fifth wave, an ending, expanding diagonal, complete with a throwover. That looks like that's about done on the stock market priced in crude oil. This is XME, metals and mining, priced in XLE, which is large cap oil and gas stocks. Looks like a completed 5-wave expanding diagonal. Each leg of a diagonal is an A, B, C. Many times the C wave within the fifth wave of an expanding diagonal, which is a megaphone pattern, must be a parabolic move. And that's, I think, what we've got. And we recently hit a Fibonacci target for the end of wave C. All of these things are suggesting that we're going to get a rotation into energy, oil, and gas out of what it has been leading and working into those areas. XOP, this is the exploration and production ETF. These are large cap energy companies and priced in gold. So you get some clean waves out of this. 1, 2, 3, 4, 5, and within wave 5, 1, 2, 3, 4, 5. 5 waves up from this low back here in March of 2020, followed by an A, B, C zigzag that subdivides as a 1, 2, 3, 4, and then an extended fifth wave. 1, 2, 3, 4, 5, right to the deepest Fibonacci I have, where wave 5 in pink would equal the net traveled of 1 through 3 pink times 0.618. And now today, the bounce, a bullish divergence also showing on that chart. So there's a bunch of ratio charts. I key off of those. They're part of an important investigative process that I go through on the markets. I haven't even showed you how I do Hurst cycle analysis yet, and I don't think I'll have time to do that, but that's an integral part of my wave counts and really assists with wave counts, especially when the item is priced in shifting sand, the US dollar. So it's time for current wave counts on several items. It's time for current wave counts on several items. And put in your requests into the chat. I'll show you real quickly. If you've never been a paid subscriber at Elliott Way Plus before, send me an email or contact me using the contact form at the bottom of any page at my website and say, hey, Sid, I enjoyed your presentation. I think I'd like to try a subscription. Never subscribed before. I'd like 50% refund off the first month. And then when I'll answer you back and say, yeah, sounds good. I'll refund 50% of your first monthly payment as soon as I see it come through, and I do. Okay. So I have a request here for Amazon. Very quickly, let me show you one stock market. One thing on stock market real quick. This pattern on the Dow Jones Industrial Average is the same pattern on the S&P, the NASDAQ, the Russell, the semiconductors, and any number of other things. As a matter of fact, here's another screenshot I can show you. This is some of the strongest stocks out there. Momentum stocks. MTUM is the ETF. Up from the March of 2020 low. 1 of a diagonal, 2 of a diagonal, 3 of a diagonal, 4 of a diagonal. 4 move down into the price territory of wave 1. That's an overlap. That's huge. And then wave 5 of the diagonal, including a throwover of a line extending from the extremes of 1 and 3. That idea continues to work. It's and continues to be essentially my main count on many items. I would, in order to see if the item that you're interested in is in that same pattern, put it on a weekly chart and turn on log scale or semi-log scale and then connect the extremes of 1 and 3 and 2 and 4, and look for a fifth wave of an ending contracting diagonal due about now, and then a pullback in many items due down through late November, early December, a rebound into January, February timeframe, and then we get into a deeper move to the downside on the stock markets down into the next 18-month cycle trough due in July, August, September, mainly the third quarter of next year. That's almost universal. Um, and the reason that it is almost universal is because there is an 18-month cycle trough due, and at least an 18-month cycle trough due in the third quarter of next year in most of these stock, almost all of the stock indices. Okay, we had a request for Amazon. By the way, this weekend, so I did my weekly webinar for Pro Plan and Premium Plan subscribers on Sunday. I do it every Sunday. And um, I was calling, by the way, I did a YouTube video not too long ago, and I thought maybe the top was in on Apple, but about a week after that video, that was about a month ago. So about 3 weeks ago, I decided that this was the pattern that we were seeing on Apple, and I was expecting that it would make a new all-time high here in late October. And I haven't even changed my arrows from the weekend. But as you can see, I was expecting um, after an A and a triangle for B, a 1, 2, 3, 4, and I was expecting this green wave 5 on up. And so it's no surprise to me that we got new all-time highs on Apple here within the last day or two. Amazon, oh, and by the way, if you go back, um, and you look at Apple of a 1, 2, 3, 4, 5 wave, wave 1. Many times after a wave, if you think you've got a 1 and 2 and you're in a wave 3, you can draw an initial target. And I did this decades ago for the end of a fifth wave up. And what you do is you look at the entirety of wave 1, take that times 0.618, and then add that product to the top tick here. And I've had this target on my charts for many years, and you can see we're right at it. And then Amazon. I think Amazon has already finished and put in an important peak back in February 2025. We got a wave 1 to the downside and a deep wave 2, and we're going to get another 1, 2 before we get into the really nasty part of the down movement, which I think is going to happen during the second and third quarters of next year. Then I've been asked about HYG. And there was a question with Trump so protective of the market, can the market ever go down? And I would say yes. I don't think any single one person, even the president of the United States, has the ability to keep the market up forever. And unfortunately for Mr. Trump, or fortunately, depending on your political slant, he wanted to be president when this was all going to happen anyway. The cycles were already in place, and he may try to fight it, and of course he probably would and has been, but I just don't think it's going to fly. The technicals are, I think, are too strong against him, and if he'd been a subscriber to my work before he ran for the presidency, he probably would have withdrawn his name from the ballot. Let's see. Bonds. Okay. By the way, here's TLT bonds to priced in the stock market. And it's starting to look a little bottomy. And bonds have been the worst investment in the world since March of 2009. The stock market's obviously been the big winner. But now I can see a 1, 2, 3, 4, 5 wave structure from March of 2009 where bonds have been getting hammered. And even this move down looks like a potentially completed five. But HYG, that's a really good request. HYG, here's the latest Hearst analysis on HYG. And by the way, HYG, I don't bother to keep a wave count on it because I don't think it's moves over the long haul in an Elliott wave looking pattern. But up from October of 2022, this looks like that same pattern. I'm seeing, although in a different timings, you know, I'm seeing that pattern up from March of 2020, the ending contracting diagonal in the stock market. But I'm seeing that pattern here in HYG. Hearst thinks it'll top here in October, probably late October, move down through late November, up through late February, there and down into the third quarter of next year. You notice that it's identically the same roadmap as the stock indices, as it should be, because junk bonds are highly correlated with bonds. A lot of people ask me, well, what about how come bonds are moving up? Well, Hearst thinks that they're moving up for a reason, and that is technical. It is a cyclical reason, and so I've been calling for this rally in bonds. A lot of people didn't believe we would get it, but it appears to be underway. And I think that there's a lot of money sloshing around, a lot of profit sloshing around from the stock market that may decide to jump into some a traditional safe haven, which Treasury bonds certainly are. And so this is a bullish through year end and really for a while. Um, ASX, I do keep a count on ASX. Um, and I use her cycles on it, Ken. I'll show you real quick. ASX is the Australian stock market. And that'll show platinum. Stryker is not the Chicago firm. Um, so ASX is here. It's real toppy right now, ASX, and especially now with the moves started down in gold and silver, calling for a pullback through essentially year end on ASX, but I don't think it'll top until mid-April next year. Next item after ASX was platinum, industrial metals. And by the way, I've really been doing a deep dive into smaller cap, you might call them juniors in the rare earths area and associated areas, as well as other metals you don't hear too much about. And that's how I found those charts that I already showed you on a couple of rare earth mineral stocks. And I've also been looking at drillers. So palladium, 1, 2, 3, 4, 5 on palladium. Wait a minute, you asked for platinum. Yeah, here we go. On platinum, I was expecting this breakout on platinum. I figured it would come somewhere down in here, and Hearst shortly after that bottom called this a 18-month cycle trough. This was a 4.5-year cycle trough. So that was the first 18-month. We're in the second 18 months cycle, a very bullish cycle. But I think a lot of the upper energy is spent for now on platinum. I'm calling this a 1, 2, 1, 2, 3, 4, 3, 4, 5 for pink 3. and either an A, B, C expanded flat down through the rest of the year, pretty much, or this could be a pink 4 and a pink 5, in which case we would get after a 5-wave up structure, an A, B, C corrective structure that might last all the way into August of next year. So bearish, pretty much. Hurst thinks that this pullback is the beginning of a bigger pullback on platinum. It'll last through December 17. Russell being asked about. Hi, Dennis. Long time. Let's see here. Looking for IWM, which is the Russell index. Let's see here. It's taking a second. Okay. Big picture on the Russell is that up from the 2002 low, we're putting the finishing touches on a 1, 2, 3, 4, 5-wave up structure. The final 5th wave up structure is a very flattish ending contracting diagonal. It's the same pattern as I'm calling for in all of these main indices. So up from March of 2020, 1, 2 of the diagonal, 3 of the diagonals have ever so slight new high here above this high. 4 of the diagonal easily moved down in 3 waves into the price territory of wave 1. But then this move to the upside, I think, looks more like a 5-wave structure than any of the indices. And I don't think the Russell tops until March of next year. I think it'll be the final index to peak. And it'll probably be because of a massive rotation out of the bubble carry stocks. This would be the AI stocks and the um, FANGs, the Mag 7s, and believe it or not, there is actually a pretty fair number of excellent low valuation buying opportunity stocks when you start looking into some of the smaller caps. So I do, but just like anything, after a 5-wave up structure, I think we get a pullback for wave B, maybe all the way back to the wave 4 of 1 lesser degree here, and then a move up into March. Is it possible that all the stock indices top in March of next year instead of now? Yeah, I would say it's possible. And the reason is because what Hearst is recommending on what all of this is a move down into late in this year, and then a move up into, I would say on average, February. So I'm not counting out the possibility that they could all make, or some of them, make a slight new all-time high and probably a final all-time high. They've not, by the way, that's a grand super cycle wave 3 label up there. But then universally looking for a move down that I think would probably be in 5 waves, at least in the Russell here. Well, in everything, into the 3rd quarter of next year. Oh, BHP. I don't. My Trade Navigator platform I have doesn't have a lot of individual Australian stocks. Ken, I'm sorry about that, and so I probably can't develop a chart on some of the ones you're looking for. But if they're a big enough stock like BHP, there's probably a U.S. ticker on some of these. And what I would recommend to you, Ken, is send me an email, sid@elliottwayplus.com, with your requests on individual stocks in Australia. Now let's see what I can put together. Bitcoin, show you Bitcoin. Devon Energy, yes, I can look at that. We're going to run to Bitcoin real quick. I don't know if you saw my charts of Bitcoin priced in these other different things, but I just think Bitcoin is toast. It never should have gotten this high. It's the biggest bubble mania, nothing. There was of all time. There's no use for the product. I've been saying this for a long time, and yet it's kept going up. And the reason it's kept going up is because this guy at MicroStrategy has been systematically buying. But look at his stock. It's still its all-time high is still holding from November of 2024, and that spurt that's up thrust into that high was a terminal thrust from triangle. This stock is toast, and the amazing thing is that this is supposed to be a software stock, and I think Bitcoin's going to crush this stock. Uh, yeah, suck it, Dale. Anyway, this is a completed 1, 2, 3, 4, 5 wave structure. It's over. If it managed to scrape out any more new highs, it would be just an absolute shock. Bitcoin is toast and it's worthless. It's antiquated. It's too slow to be used as a currency. So what the hell good is it for? Now, there might be other stocks that could do better, or crypto, Ethereum, but the problem is Ethereum's showing the same pattern. It's showing the same 5 wave pattern up from the late 2018 low, 1, 2, 3, 4, and then an ending expanding diagonal. I could see this maybe trying to make one more new all-time high, but it's not a good from an Elliott wave perspective. This is terrible. What else? DVN. DVN. I just don't think cryptos. There's over 1 million cryptos now. It, it will say goodbye to the whole bubble idea. Is my final words on cryptos. Um, Devon Energy would be under, I think, buy low oil and gas stocks. I don't know if anybody noticed, but we'd started to get a pop to the upside um, on natural gas. Frankly, you look across these markets, the only thing, as far as the major trading items in the commodity space, the only things that are still low are oil and gas. Everything else has already busted a move and is pretty high. Uh, Oil is still below has moved back below $60 a barrel, and Saudi Arabia's break even for a barrel of oil is 90 plus. Um, Here we have Devon right here. There's a bunch of these stocks that I think are very bullish moving forward. Now, in the case of Devon, I could expect I just did a Hearst on this in mid-October, and looking for upward movement into early November, um, and then down into late in the year. So I think this sideways price action is going to probably take us through year end on Devon, and I think net gas next year, the first half of next year is going to be a big move to the upside in net gas and oil. I, you know, Boeing is the only individual defense contractor that I keep a updated wave count on. And I think Boeing will also have a good year next year. Yeah, Boeing's a big defense stock. If Boeing's moving up big next year and so are oil and gas, I'll draw your own conclusions about what might cause that. But uh, on Boeing, I'm looking for a pullback through the end of the year on Boeing. I don't know. I don't have any charts on anything else other than Boeing. I can't, and I haven't even looked at any as far as defense names. Once again, if you were a paying subscriber, um, I often work up charts for my paying subscribers. And a lot of times they're very interesting requests, and they're maybe at a key juncture, and I end up continuing to keep a wave count on them. All right, what else? Anybody else? Running about an hour and 45 minutes. SM Energy. That'd probably be right back where I was. I've got a number of drillers and smaller cap junior stocks that I've been looking at for subscribers. Uh, and SM Energy is one of them. So SM is right here. It almost to make a new low, but Hearst thinks that it won't make a new low. It's very similar to crude oil itself and will start edging to the upside. Crude oil has been holding above that low back in April, barely. And this stock is as well. The last time I did a Hearst on it was on the 11th of October, and it was bullish on SM through late March. Uranium. I think uranium will do well, especially CCJ over the coming years. But on the shorter term, I can't remember where I keep that. I think I keep it here. MP, I showed you the current MP wrote, this is a screenshot I just took today. No, uh, yeah, I'm looking for a sideways wave 4 on MP materials based on her cycle analysis all the way into March. Now, it's up 900%. So yeah, I would expect a wave 4, and I'm predicting based on the shape of the composite line that I do using her cycle analysis that it would be an expanded flat. So we'll see. So that's MP materials, uranium. I could keep this going until let's keep going until 9 o'clock at the latest. Yeah, Central Time. Uranium, from this low right here, I think we got an impulse, a 5-wave impulse, and now we're getting a pullback. You'll notice that I'm expecting a pullback in most all metals or metals related items. Well, of course, I'm always willing to make adjustments to my wave counts. The amazing thing about the wave counts is that I always make them compatible with the Hurst cycle analysis. And that, for instance, I made an adjustment about 3 weeks ago on my Apple count and expected one more slight new all-time high. And the reason, because Hurst changed his mind about where a recent trough was. So it's always a marriage of the current Hurst. Can Hurst change its mind? Maybe Hurst, in this case, I will guarantee you that Hurst is calling this a 20-week cycle trough. Well, what if it just changed his mind on that? Then we would keep looking. But this on uranium was this low here back in April was a 4 URA. This is uranium stocks ETF, 4.5 year cycle trough. So this is going to be bullish for a while on uranium. And then within each 4.5 year cycle, there are 3 18-month cycles. Usually, the first 18-month cycle is bullish. The second 18-month cycle is more kind of even, but usually makes a new all-time high, new high during the structure. And then usually the final 18-month cycle is more bearish as it moves down into the next 18-month cycle troughs. And then within each 18-month cycle, there's 2 40-week cycles. And then within each 40-week cycle are 2 20-week cycles. So this is probably a 20-week, and this is the 40-week. So the next 40-week cycle trough in uranium is due the last time I did a Hurst, which was on October 17. It was due in early February of next year, and then it's just more up. I will say that's a good question, KS, and I will say this. I've been counting waves a long time. Originally, I just counted using Elliott wave and Fibonacci. I was always having to change my wave counts and adjust them. Then I added Hurst cycle analysis about 10 years ago, and there was a big learning curve there as I learned how to utilize that product. And it's gotten to the point where, every Elliottician has to adjust their count from time to time, but I spend much, much less time adjusting my wave counts now than I ever did before by a long shot. That's why I can count so many items. For instance, if I did a new Hurst right this second on URA, and I'm going to do it just to show you. Um, I've got loading it up in the other monitor, and this is URA starting Jan 2010 one repen Yahoo. So open URA starting Jan 2010, Hurst nominal model, troughs only, one repen preferred starting in April of this year. The Yahoo data is what I'm using. It'll bring in the data and I'll tell it to do the analysis. And it's done. And here's what it is suggesting. That this pullback is just the beginning of a larger pullback. It's going to pull back through November 10, then rally through December 11, and then move down through February 9. Boom, 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 February 6. So that has changed by 3 days. Certainly not enough for me to change the wave count, just barely to change at all. And it's been 2 weeks since I did this first analysis. And then it is bullish through May 9 down through 12/24. So that's pretty close. And I might have taken a little bit of a liberty there because I know good and well that that's going to be in a wave 3 at that point, where instead of up only through May 9, it might peak make higher highs as it's putting these tops in over here in late August. That's exactly what I did. And then the move down into December and then on up. Yeah, these dates are guidelines. They're guidelines. They're not to be taken verbatim. I should probably mention that more often. And then up through May of 2027. So you can see that roadmap really hasn't changed much. I think the next big buying opportunity in uranium is going to be approximately February 9, the next 40-week cycle trough. And by the time it gets to there, I would look for a three-wave pullback to approximately the wave 4 of 1 lesser degree. That's the Elliott wave. But no, don't take the dates verbatim at all. They're just guidelines so that I can work my Elliott wave pattern into the future. That's how I do it. Um, once in a while I have somebody join me in a webinar or whatever, and they actually try to make fun of me for using the composite line the way I do, and they say, "Well, you're just counting the composite line and developing a wave count off the composite line," and that is not true. What I do is I look at the internal wave structures, determine where it's at, and then I can tell when we're going to be in a wave 3, an extended move. These orange lines, they don't tell you how far price is going to go. They tell you the direction, the uh, estimated direction of the market during that period. And if you move in closer, you can see that they're quite jagged as they move down. And the reason is Hurst considers a lot of different cycles in this. And I could smooth that out a little bit like this. But I often will just take the peaks and troughs of the composite line, put them on the chart, and I'll just represent to you. I have to change my wave count probably far less than any wave counter that doesn't use cycle analysis or try even to attempt to incorporate it some degree into their work. Been asked for Euro and Aussie currencies. AXP, Tesla. I'm immediately bearish Tesla. I think Tesla is in an extremely bearish pattern. I'll just represent that to you. Uh, AXP, I can't remember what AXP is. Oh, is that American Express? I don't have a wave count on that one. Moving to Tesla. So I think this massive sideways price action back here was a triangle. And I think this was a terminal thrust out of the triangle. And I think that was the end of probably the end of a 5-wave up structure on Tesla. And now, because it made a new high after that, I think we're in a corrective structure. This started with 3 waves to the downside, and then we got 3 waves up. And now we should get 5 waves to the downside. And this move to the downside right here, this started in right at the beginning of this year, looks like a really good 5-wave structure. And even though the upward movement was very deep, it did not take out that high. And the middle portion looks like a triangle. So this looks like essentially an ABC pattern, very deep. But based on this looking like a 5, and based on Hurst being bearish from late September through the rest of this year, I am bearish on Tesla through the end of the year. And I think Tesla gets a bounce back through mid-year next year. So there's Tesla. Let's see what else. Euro and Aussie. I don't like the wave counts or the way the price action looks on either the euro, the Aussie, or the pound. They just the Hearst is confusing on those, and my count on the on NDX is identical to the S&P and the Dow Jones Industrial Average. It's in the very final throes of an ending contracting diagonal that started March of 2020. And then it's going to move down through late this year. And let's say, well, you know, into early December probably, and then up into probably late January, early February. I'm talking about NASDAQ, and then down into the third quarter next year. Same. And I do this individual Hearst on each one. The Aussie, I wouldn't trade this with a 10-foot pole. Look at this crap. Look at how manipulated and ridiculous this price action looks and how noisy it is over here. So there's my wave count. Take it for what you want, but I don't like it. And then on the euro, um, I've got a main and an alternate, and I think this is the one I like the most. And it's bearish on the euro down through year end. So up from this low, a 1, 2, 1, 2, 3, 4, 3, 4, 5 for wave one. So eventually this turns very bullish. And then it's in, but I think it's in a wave two pullback, and it started with a three-wave structure for wave A. Then it got three-wave structure to a new high above this high. So I'm calling that a B wave. This looks like maybe a leading, expanding diagonal. 1, 2, 3, 4, 5 for one. Then we get an ABC for two, up through and the Hearst. I did the Hearst on this actually more recent than that. I did it on Sunday or Saturday or wave two, and then we get a 3, 4, 5 on down. So that's I think a pretty good count on the euro. If you were going to ask me what my favorite currencies were to trade, they would be the Canadian dollar and the Japanese yen. Canadian dollar be a number one. And the reason is because I really think that crude oil is ridiculously cheap. Now, I've just been waiting for somebody to put something in a comment about how we have an oil glut and there's no way oil can rally, where the world is awash in oil. And there's a few documents and that I wanted to show you, or uh, here's about that. You just have to Google this headline. Underinvestment could lead to oil supply crunch. So oil has been low for so long that companies have, there's been no reason for them to attempt to produce anything but the easiest to produce oil. The EIA is, in my humble opinion, lying through their teeth about this oil glut. The EIA is a government agency, and I think they have every reason to lie because oil moving up would be would be if it went up a lot, be a very difficult situation for the world economies. But at under $60 right now, with all the inflation that we've seen and everything else, why would oil stay so low? This article explains how the underinvestment in oil is going to lead to an oil crunch where we'll have a shortage. Number two, where are the oil barrels? The EIA gap deepens confusion over the looming glut. So they are claiming that the world is awash in oil, but they can't prove it because their numbers don't match up. There's a bunch of missing barrels on the oil. And then finally, the what I think is the definitive oil and gas analysts that I've found would be the guys at Gorosin.com. Gehring and Rosenschwag are their names. And they follow the numbers, and they say the EIA's numbers haven't made sense for a long time. They're ridiculously wrong. They're based on antiquated models. And what we really are seeing is depletion of the Permian and the shale oils. And they've done all of the math and science in order to have that opinion. And that makes oil about the only thing in the world that right now that is actually uh, ridiculously cheap. Same with gas. Um, well, yeah, that's my idea. All commodities have been ignored during this bubble, this carry trade bubble where all the money went into a few stocks. I mean, you can see it. It's so easy to see, to visualize now at um, FinViz. It's just so easy to visualize that if I can get this moved over here. Oh, boom. Ridiculous. There we go. So it's pretty obvious that due to the carry bubble trade, that there's these about 10 stocks that are now constituting as much as 40% of the S&P. All of these others, and these are the others in the S&P 500. So these are still incredibly large stocks. Let's put it on the 1 week performance. Here's the entire energy sector in this little square I'm drawing right now. There's a whole bunch of these stocks that are larger than the entire energy sector all by themselves. So a lot of stocks have been left for dead. This is my concept, and I'm trying to find buy low opportunities in stocks. These would be buy and hold opportunities, and I found a whole bunch of them this year and made millionaires out of numerous subscribers, and I'm gonna keep doing that. That's why I spend so much time on so many stocks. So, but it is in fact the Canadian dollar that is the one to look for as far as going long the Canadian dollar. If oil turns and starts going up, and this is crude oil right here, and it's inverted, and I think it's topping right now, and it's going to start going up. You should see the U.S. dollar move lower against the Canadian dollar. In other words, the Canadian dollar, and this is the FXC, should start rallying in a wave 3 character to the upside. The FXC has given a very clear 5-wave up structure out of its low back in January. We're in the wave 2 pullback. It's moved back to the wave 4 of 1 lesser degree. This is going to turn into a big move to the upside in the Canadian dollar, which very often rides right along crude oil. The fact that we have a 5 waves up followed by a pullback to the wave 4 of 1 lesser degree is in Elliott wave speak, big evidence that we're going to see higher oil. So that let's see, we made it to 9:04. I think we'll just call it right there. Um, thank you so much for joining me. I'm going to turn on the video of self. And as a reminder, if you've never subscribed before, or maybe if you just haven't subscribed for a very long time, so many years, you can get 50% off your first month. Um, all you have to do is email me or get with me on the contact there. So this is has been the Premium Plan Quarterly webinar. My name is Sid Norris. My website and service is called Elliott Wave Plus. Hope to see you amongst the paying subscribers. Thanks for joining. See you soon. Bye.